So welcome. We are here with Viljar Arakas, of course, a person who needs no introduction to the Baltic real estate investors. But still, very nice to have you here.
Thank you, Matthias.
Yes. And let's start off with the GDP. First of all, Estonia's GDP, as we all know, have declined around 3% last year, and even in Q1. But if we look at the real estate market, there really hasn't been any fire sales or distressed assets sales. Is this the crisis where we avoid that, or do you see that coming?
I don't think that we have any kind of crisis in Estonia, because if you look our GDP, then it used to be like 5 years ago, a little bit less than 30 billion. Now it's a little bit less than 40 billion. We have had, of course, a crisis in inflation, and there is a speculation that how well Estonian inflation is actually calculated comparing to other Baltic peers. This is something which we don't have any concrete facts on, but of course when when inflation is flying on such a high level, then there can be some measurement errors also in, which is as it is. But in real estate market, yes, there has been a clear downward cycle, but thanks to the fact that all of our real estate sector has been under level, or let's say under leveraged in Scandinavian standards, but having a very conservative level of leverage after the financial crisis, which we had a decade plus ago or 15 years ago, then I would say that there hasn't been any kind of fire sales which we would like to use an advantage of, but actually none of projects have been out there.
Right. But do you foresee that they will come, or is the base case scenario that it won't get any worse?
It won't get, I guess so, it won't get any worse. We are here sitting just 1 week before the ECB decision of starting to lower the interest rates, which now seems to be like a sure fact. Yes, the 6 months Euribor is already in a declining trend, so it's calculated in. But looks like as the worst is behind us from an interest rate hike point of view, then, and also if we add in the formula that now US help to Ukraine has been established again. So I think if the security situation doesn't get any worse, it is bad in our region, as we know, and interests are in a declining phase, plus Scandinavian market will start to increase somewhat, or at least not decline further, then our export sector should be doing good. So that's why I don't think that we will face any of majority or major collateral damage, we can say like that. Some projects can be maybe having some difficulties, but those are very minor and very limited in their number.
Right. And if we look at the differences in GDP among the Baltic countries, it seems like Lithuania and Latvia are doing better than Estonia. Will this affect your capital allocation going forward?
Absolutely, but actually one interesting fact I came across yesterday or lately was the fact that now the richest region in the Baltics is Vilnius region. Mm-hmm. It used to be for a generation Harju County in Baltics, or Harju County in Tallinn, sorry. But now it's like Vilnius, and the nominal GDP in Vilnius is like 100% of European average. It's like 99 in Tallinn, though, so the differences are not so big. But in the same time, 10 years ago, this difference was 20%, where Tallinn was ahead, and 40% even 20 years ago. So that's why they must be doing something right in Vilnius. And of course, it affects our allocations. But for us, Baltics is a home market. So it doesn't really matter, is it Tallinn, Riga or Vilnius. This geographical diversification is not a thing in Baltics. Asset allocation, or I mean by sector allocation, is more important than geographical diversification.
Right. And if you look at the sectors in Vilnius, are there any interesting segments like office or logistics, or how does it look?
Office has been growing or booming, we can say, in Vilnius for a year. So clearly the office demand in all Baltics is soft, and that's I think the theme worldwide. Logistics is a byword for anybody, and I think the retail has been actually one of the segment which has been oversold or underappreciated. So after COVID, everybody was thinking that retail is dead. That has been a clear misjudgment. So retail, as we can see also from our shopping centers around Baltics, is doing much better than everybody thought. But there aren't too many products or good level centers out there to buy them up.
Right. And the other segments, I think you mentioned earlier that office seem to be quite tough at the moment. Do you see that improving as well?
No, I think office will remain weak, and I think also a lot of new projects will be put on hold, which are not in a construction phase. As to start something on a speculative basis when you don't have an anchor tenant upfront is very risky, and banks are very reluctant to finance that. So I guess we won't see much of new upcoming office buildings all around Baltics, but still the market is still active, not of course relatively inactive. I mean, if we compare it to year 2021, the turnover of like apartment sales is like has decreased. I mean, new apartments like 2 times in Tallinn and the other towns as well. So it's a new reality we're living in, but we can't say that the market is like fully dead. It's just moving forward on a lower pace.
Right. And a fairly new segment is the elderly care homes. What do you see like the long-term potential there? Could it be like in Sweden, for example, where it's kind of a big segment, a stable and big segment?
Yeah. As we have talked between you and me, Matthias, before, we both turn grey with you. Yeah? So the economy also turns grey. So the demand, natural demand is clearly there. The problem is that those products at the moment, or I mean the elderly homes at the moment, are out of state and in a wrong place. Usually in the rural areas where close relatives have a very limited access thanks to the distance to the main or main towns. All of those needs to be rebuilt or new products created. We have we are building at the moment our 3rd one in Estonia, basically from scratch, and we hope to do the same in Latvia, Lithuania. Currently, we haven't seen in Latvia and Lithuania operators as well operating, or private operators as in Estonia, but it's just a question of time. This is a clearly growing trend going forward, absolutely.
Right, and do you foresee like the governments or the municipalities, whoever owns these today, that they will allow private real estate investors?
I think the customers will vote with their money. And of course there are some 100% state-sponsored facilities, but there are more and more quasi like private plus state financed. So customers will vote with their money. As we get more richer, then also we have more availability to provide such kind of service to our elderlies or to our close nuclear families. So it will grow, maybe not in a pace like in Scandinavia, but definitely that is something which is untouched territory, I can say even like that, right. As it has been really outdated of current buildings are really outdated. So that will change in the future, I'm sure.
Okay, great. And jumping to valuations, which is often a talked about topic, do you feel like, are they fair now, given what you see in the market, like the outlook?
Well, I would say valuations are always theoretical. And that is not the only comment for Baltics, it is worldwide the same thing. Especially in the Baltics, where market is very illiquid. The main transactions of last year were all special cases, like Viru Center was sold to the minority owner, and then Technopolis need to make an exit due to the closure of the parenting fund and so on. So these all have been very special cases, so very few arm's length deals, which where buyer doesn't need to buy, seller doesn't need to sell. So it's very hard to determine what is the actual value at the moment. But what we can see from April onwards, the deal volume in Europe, commercial transaction volume, has started to increase and is now over exceeding after 2 years previous, or year on year, the month which we had last year. So that's why now when the interest seems to be in a declining trend, the interest is starting to coming back. And for a decade after the global financial crisis, real estate was a substitute for bonds, as bonds were yielding basically nothing. Now those tables turned very dramatically 1.5 years ago, or let's say start like 2 years ago, and now we're starting to find a balance again where bonds are still very attractive, but becoming less and less attractive as interest rates start to fall. This will not happen overnight, but the real estate starts to make a slow comeback, if we can say like that.
So basically what you're saying is that the number of deals is a good sign of that the valuations are correct.
Of course, liquidity is a number one criteria. It has been low, but of course valuations take into consideration of all these changes in interest environment and so on. So I guess those have been bottoming out. So now it comes down to the economical activity. What's the vacancy rates, what's the rents rates going forward, as the interest rates will clearly start to decline, and value or weighted average capital cost also.
So I think you mentioned in your last report that you see a potential for valuation upgrades for EfTEN this year.
We hope so. Not sure that it will happen in a mid-year, but still in the second half of the year, I'm quite sure of that. But as we start to see some transactions which have not really closed yet in the Baltic markets, but soon will be closed. So those will verify the yield level, which is actually not so high. It's still sub 8, or let's say close to 8. So that, and I guess that's a good proxy for evaluations going forward. Yeah.
Right. Okay. And I have to ask about the daily grind, how that is going. I mean, your rent negotiations, will you match inflation this year, you think, or you have to?
This year, I think probably we will, as the inflation has been coming down quite significantly. But it's not, let's say, we always look at case by case. It depends where is the current rent level of any given tenant, and then what the contract is allowing us to raise it. So if it's too high, then we won't raise on a full inflation. But it comes down to evaluating the situation one by one. But clearly, inflation helps to raise rental rates, absolutely.
Right. And coming back to the bond market, do you feel like there is a bond bubble, not in the real estate only, but it seems like there's a new bond issue in Estonia or in the Baltics every week now?
It looks like this. It reminds me this hike in First North offerings. Maybe as the emittents are more stable or more mature than on a First North they were during this peak years, but a lot of bonds are being issued. And if I look at the coupon rates they're offering, then also knowing real estate, and if it's like early teens, then how can you make it actually work in a soft demand environment where we are currently? But comes down to really evaluating every single property. But I feel that the bond market is red hot at the moment, at least in real estate segment. That's what I see daily, and I guess it will start to wind down.
Given that, is there any possibility that EfTEN will do a bond rather than bank financing?
No, on our real estate side, we are very good old classical boys. We don't like to use the bond as our instrument of leverage in our balance sheet. No, not on that. We have created a new fund, special opportunity fund, which will help to co-finance different kind of developments which are not fully ready yet. There we could be on a buy side of some kind of bond instrument. Depends. It's all very depends on a concrete project. But to imitate bond from EfTEN funds, no, we don't look this as an alternative of going further.
Right. Okay, and if we look to the future, I mean, what would you say is the biggest risks for 24 and maybe even 25?
Still, I think the security concern or the cloud which is overhanging here, this is the biggest risk which influences us a lot, which we don't influence ourselves at all. It's still there, so that is something which needs to be answered, because real estate is something which you can't take away from any country. Startup, you can upload to some cloud your software and start to program from somewhere else. So that is something which is still out there. Now going further on interest rates, I guess, as we said, that those are now on a downward trend. So and also I think the equity offering, which has been really low, or fundraising in new money raised in Baltics has been really minimum in the last 12 months in real estate sector. I think this will start to grow. I mean, especially from equity point of view, not from bonds point of view. Those have been quite many.
Yeah. And what do you think needs to happen before foreigners come back? Will we have to have a peace agreement, or how do you feel?
It's anyone saying it's, you can have a very controversial view. You can say that we are part of NATO, nothing happens to us, or you can have a view that NATO is next. Both are right and both are wrong at the same time. So it really comes down to the people. But I guess the security situation is not as main thing as we like to think of that. I would say Scandinavian markets need to get on their feet again, and they are not there yet. So that's why if they get the stability at home, then again they will start to look around to newer countries or to other foreign markets from their perspective, with some newer transactions. We have had outflow of capital only thanks to the fact that their markets at home have been under pressure clearly.
Right, so that is the key driver.
That is a key driver in my view.
Right.
Yes.
Right, interesting. Okay, no, I think it's great to have this talk, and I hope that you lower your handicap this summer.
Thank you. Will do my utmost.
Great. Thank you.
Thank you.